Good day to you, Travis. Today is Thursday, July 24th. I am back from my Young Life trip. It was an amazing experience with all those kids up in Canada, but I had no communication with cell phone or internet or anything, so I came back to quite the surprise when I passed into the U.S.-Canadian border to see that we had a huge plummet in mortgage rates while I was gone. So it's always nice to come back to. I was hoping the opposite would happen, but of course that's never the case. Mortgage bonds plummeted by over 200 basis points last week, as some of you may have heard. That 200 basis points equates to 2 points on a loan, or also over 0.5% in rate. So you could have had a 6% rate last week, 6.5% this week. This morning, some economic reports came out pretty dismal, which caused bonds to react in a positive way, and stocks to go in a negative way. The Dow Jones is down about 133 right now. A few reasons are Ford reported, I think, $9 billion in losses for second quarter. $9 billion. That's a heck of a lot of money for a company to sustain losses like that. And they're not even in the financial market. So the oil prices with Ford's, obviously their big selling item are trucks and SUVs, and that those have basically come to a standstill with selling. So we can see why that would happen. Also, existing home sales are down, which lower than they predicted. They knew they were going to be down, but not as much as they had predicted, as well as existing inventory. Home inventory right now has jumped from 10.8 to 11.1. So 11.1 months of houses are on the market right now. So how that equates is basically if they sold every house starting today on the market, it would take 11 months to sell every one at the pace we're at. So 11 months. So that's pretty scary. Also, jobless claims came in for the week higher than they expected, quite a bit higher at 406,000 jobless claims. So all these economic reports are bad for the economy, bad news for the U.S., but good for mortgage bonds. So again, it's kind of that bittersweet thing. It's hard to get excited about mortgage rates getting better based on the fact that our economy is doing bad. So with that, that's about it for today. There's still the shakedown of Fannie Mae and Freddie Mac, the full implications of that. It looks like this housing bill that President Bush was going to veto is not going to veto now, and that should be hitting the wires. The Senate, or actually the House, passed yesterday, going back to the Senate, and the President's stance is he's not going to veto it now because he wants to get immediate relief to homeowners. And so once the terminology and wording of that bill comes out, I'll make sure and brief you on that. But for now, that's where we're at, so I look forward to serving you. Have a great day and be blessed.